Ever wondered how to start investing with just $100 and build your financial future? If you're watching this video, you're likely looking for effective strategies to begin your investment journey with a small amount. Welcome. Today, we're exploring the exciting world of investing with a focus on how to start with just $100. These tips will help you make the most of your initial investment and set you on the path to financial success. Let's dive in. Number 1, educate yourself. The first step to investing with $100 is to educate yourself about the basics of investing. Understanding key concepts such as stocks, bonds, mutual funds, and ETFs is crucial. For example, reading books like The Intelligent Investor by Benjamin Graham can provide valuable insights into smart investing. Educating yourself helps you make informed decisions and avoid common pitfalls. It empowers you to understand where and how to invest your money wisely. Start with online courses, investment blogs, and financial news to build a strong foundation of knowledge. Number 2, choose a micro-investing app. Micro-investing apps are designed to help you start investing with small amounts of money. Apps like Acorns, Robinhood, and Stash allow you to invest as little as $5. For instance, Acorns automatically invests your spare change from everyday purchases into a diversified portfolio. Choosing a micro-investing app makes investing accessible and straightforward, even with limited funds. These platforms often provide educational resources and user-friendly interfaces to help you get started. Research different apps to find one that suits your needs and investment goals. Number 3, invest in fractional shares. Fractional shares allow you to invest in high-priced stocks without needing to buy a full share. For example, if a single share of Amazon costs $3,000, you can invest $100 and own a fraction of the share. Platforms like Robinhood and Charles Schwab offer fractional investing. Investing in fractional shares enables you to diversify your portfolio even with a small amount of money. It gives you access to high-growth stocks that might otherwise be out of reach. Look for brokerages that offer fractional shares and explore their options. Number 4, start with exchange-traded funds, ETFs. ETFs are a great way to start investing with $100. They offer diversification by holding a variety of assets, such as stocks or bonds, within a single fund. For instance, you could invest in an ETF that tracks the S&P 500, giving you exposure to the top 500 companies in the U.S. Starting with ETFs reduces risk and provides a balanced approach to investing. They often have lower fees compared to mutual funds and can be traded like stocks. Research different ETFs and consider their expense ratios, historical performance, and the sectors they cover. Number 5, consider a robo-advisor. Robo-advisors like Betterment and Wealthfront use algorithms to manage your investments based on your risk tolerance and financial goals. You can start with as little as $100 and let the robo-advisor create a diversified portfolio for you. Considering a robo-advisor provides professional investment management at a low cost. It's ideal for beginners who prefer a hands-off approach to investing. Compare different robo-advisors based on their fees, services, and user reviews to find the best fit for you. Number 6, participate in a dividend reinvestment plan, DRIP. DRIPs allow you to reinvest dividends earned from your investments back into purchasing more shares, often without paying additional fees. For example, if you own stock in a company that pays dividends, you can reinvest those dividends to buy more stock automatically. Participating in a DRIP helps compound your returns over time and grow your investment with minimal effort. It's a cost-effective way to increase your holdings and benefit from the power of compounding. Look for companies that offer DRIPs and consider their dividend history and stability. Number 7, invest in a high-yield savings account or certificate of deposit, CD. If you prefer a low-risk investment, consider putting your $100 in a high-yield savings account or a CD. These options offer better interest rates than regular savings accounts. For instance, an online bank might offer a high-yield savings account with a 2% annual interest rate. Investing in a high-yield savings account or CD provides a safe and stable return on your money. It's an excellent choice for risk-averse investors who want to preserve their capital while earning some interest. Compare interest rates and terms from different banks to find the best option. Number 8, Use dollar cost averaging. Dollar cost averaging involves investing a fixed amount of money regularly, regardless of market conditions. For example, you could invest $25 every month into a stock or ETF. This strategy helps reduce the impact of market volatility on your investments. Using dollar cost averaging ensures you're consistently investing and can potentially lower your average cost per share over time. It's a disciplined approach that can mitigate the risk of investing a large sum at the wrong time. Set up automatic contributions to maintain this strategy effortlessly. Number 9, look for low-cost investment options. Minimizing fees is crucial when you're starting with a small amount of money. Look for investment options with low or no fees, such as no-commission trading platforms or low-cost ETFs. For example, many online brokers now offer commission-free trades for stocks and ETFs. Looking for low-cost investment options ensures that more of your money is working for you rather than being eaten up by fees. Compare the fee structures of different investment platforms and choose those that align with your budget and investment strategy. Number 10, start a retirement account. Even with $100, you can begin saving for retirement by opening an individual retirement account, IRA. Contributions to a Roth IRA, for example, are made with after-tax dollars, and your investments grow tax-free. Some brokerages allow you to open an IRA with no minimum deposit. Starting a retirement account early gives your money more time to grow through compounding. It also provides tax advantages that can benefit you in the long run. Explore the different types of IRAs and choose one that best fits your financial situation and retirement goals. Number 11, stay consistent and patient. Consistency and patience are key when starting with a small investment. Regularly contributing to your investments and allowing time for them to grow is essential. For example, committing to invest an additional $50 each month can significantly increase your portfolio over time. Staying consistent and patient helps you build wealth gradually and take advantage of compounding returns. It's important to have realistic expectations and not get discouraged by short-term market fluctuations. Stick to your investment plan and regularly review your progress to stay on track. Conclusion: starting to invest with just $100 is possible and can be the first step towards building a solid financial future. By educating yourself, choosing the right platforms, and staying consistent, you can make the most of your initial investment. If you found these tips helpful, don't forget to like this video, share your experiences in the comments, and subscribe to our channel. Hit the bell icon to stay updated with our latest content. Thanks for watching.